ABFM, that is Advanced Business and Financial Management. Okay, so what are we going to talk about today? I'm going to start with the area of sources of finance and financial strategies. Acha, what do you mean by the sources of finance? Sources of finance would mean the places from where we are arranging the money, where we are arranging our finances. And how are we arranging our finances? We would be arranging our finances in such a way that in terms of our finances, we would be looking at the money, right? We'll be looking at from where are we arranging the money. That can be debt and that can be equity. This is owners funds, the funds in which the owner has invested, and debt means funds where we get money from outsiders. So in this case, debt is basically the loans that we take, term loans, cash credits, overdrafts, debentures. Those are deposits, those are debts. While the money that we ourselves are investing is called equity and is also termed as capital. Now if I talk about capital, capital is again of two types. If I talk about capital, capital is basically equity. Owners funds are also called equity, but there is one called equity capital, the other one is preference. In terms of equity, shareholders, they get the leftover money. Whatever is left, they will get it. While the preference shareholders will get preference over equity whenever we are paying dividend at the same time, at the time of liquidation. When the company is dying, they are given money before equity. Okay? So the crux of the entire point is we can either have our own money or we can take outsiders, right? If we are using our own money, it can be based upon equity and it can be based upon preference. Equity means the owner's funds and preference means the money that is that is also owner's funds, but these people do not want to take a lot of risk. Their risk is limited. Okay, so here comes the first questions. What is the primary purpose of these financial strategies? Why do we bring up these financial strategies, everyone? There must be a specific reason for coming up with these financial strategies. Now, first is to maximize the employee satisfaction. Then we have minimizing the government regulations. Then is maximizing shareholders' wealth or reducing the competition. What would be the correct answer? What would be the correct answer, everyone? Why do we do these financial strategies and all? What's the reason behind it? Whenever we are dealing with these financial strategies, the basic reason is that we would like to maximize employee satisfaction. Our money has nothing to do with employee satisfaction. Our employees satisfied till the time we are giving them money, isn't it? Then we have minimizing the government regulations. Government regulations has nothing to do with our financial strategies. Maximizing shareholders' wealth. again, that's one of the most important points because they are the ones who are putting their money into the business. And reducing competition, no, it has nothing to do with the business there. So in this case, the correct answer is maximizing the shareholders' wealth. We would always want that the shareholders who are investing in the business should get the maximum. So in this case, the correct answer is C. Okay. Okay. Skip the question. Which of the following is not the source of financing for a company? Bank loans, equity finance, retained earnings, or bonds, which are not a source of external financing. External means outsiders. Bank loan is outsider, right? Then bonds are also outsiders. Achha, there are 2 points. Both these points, equity and retained earnings. These are both something that belongs to the business. These are owners' funds, but we will issue shares to the people and we will ask them, why don't you put your money into the business now? Then it is equity is also external in nature. There is only one thing which is internal, that is retained earnings, right? So there is only one point which is internal, and that is called retained earnings. Retained is our own savings. It's also called internal accrual. The term internal accrual is given in the IIBF book. So the correct answer is C. Retained earnings. Right? So now let's move on to the next question. Okay, let me just adjust the question a bit. What is the key advantage of equity financing? Why would we take money from certain people to whom we are also giving voting rights? Why would we do that? What is the key advantage of using equity? Financing for the business. Equity financing is good for the business due to interest payments are taxable, no dilution of ownership, fixed repayable schedule, or low cost of capital. Hardcore truth is low cost of capital. No, this is not the point. What is the key advantage of owning a business equity financing? No dilution of ownership. When we issue more shares to people, then it will dilute our ownership. For example, I have ownership already, and if I buy more shares, there's no problem because I'm still the owner now. If I issue a few shares to you, this is where the entire thing goes down the drain. Okay, which is not good. So in this case, I would say dilution of ownership is actually advantage of using. No, in this case, this won't be the answer. B is not the answer. And in equity, we do not have tax deductibility. So there is, if there's a debt, then only we have tax deductibility. This will not be a part. And the fixed repayment schedule is definitely not there in equity. So I'll go for lower cost of capital. The correct answer is D. Okay, here comes the next question, everyone. Go ahead and check it out. Which financial strategies aims to reduce the risk of spreading investments across the different assets of the classes? Achha, there is one particular thing. Warren Buffett someday said, never put all the eggs in one basket. Now, what do you mean by this? Diversification, leverage, capital budgeting, or cost cutting? The correct answer would be diversification. You should not put all your money in one particular area. You should spread it out in different areas. So that is a few in one company, a few in another company, a few in another company. So whenever we spread out the money, it is way better. So the correct answer would be diversification. Okay? The correct answer is diversification. And in terms of investing somewhere, we also call it portfolio management. Next question. which of the following is often used to fund the short term inventory needs of like accounts receivable as well as inventory? Acha, inventory is something if I buy, I'll have to pay the money as early as possible, isn't it? No one's gonna give me year or two or three or four. They'll be like, nay, nay, you will have to give it to me as early as possible, isn't it? We are gonna be worried about this, that I get the money as early as possible. So that means we are giving or taking loans for a very short period, right? So in this case, what would be the correct answer? The correct answer here would be, the correct answer would be equity financing. It's a long term one. Once you invest, it is just never short term. And then the second point is trade long term loans. Yeah, I don't think long term loans are a problem even. That's again something which is way long. It will take, there are certain loans that people take for 10 years. Then we have the trade credit, and then we have venture. Venture is basically, now I looked at your company, I found it quite interesting. I buy some shares of your company and I try to later on eat the company up because I could see that the organization is going really well. So it's better that I try to change the entire board of directors and put my people into work there. That is venture. So in this case, the correct answer would be trade credit. The credit that is given to us only for a shorter period, and that too, that is a business credit that we are giving. Okay? Okay. I think I'll have to adjust this portion as well. So till then, how do we define the trade credit? Trade credit is something where we that is a part of the business, daily business. That means if I buy some goods on credit and later on I'll say the creditor that I'll pay you later on regarding the goods. Once we'll be selling those goods, now I'll make you the payment right away. People does that because they don't have enough money to raise it on their own. So what will they do? They will try to arrange their funds from all these people now, from the person whom they are buying. Once they get money, they will pay it off. ठीक है ना? So in this case, the next question is, which financial ratio measures a company's ability to meet its short-term obligation? This is not related to the long-term ones. Debt to equity, we have said about it. Debt equity is for the long-term loans only. Return on investment is if I put money somewhere and I am always investing in returns. That is return on investments. Current ratio and PE ratio, price to earning ratio. These are ratios are quite important, but in this case the correct answer is current ratio. Oh, I'm sorry. Okay, it would be treated as the current ratio. Why do we call it the current ratio? Simple. Current ratio talks about the current assets and the current liabilities. Do we earn enough to pay off our current liabilities? Okay? So correct answer is current ratios. What is the goal of financial leverage in the business company's capital structure? When we talk about leverage, now leverage can be stated as something which is we'll be studying about it in the upcoming lectures. Leverage is basically, acha theek hai, I bought a particular car. Whenever I'm driving the car, I got the car which is not this is manual in nature. We have specific gears and we have to keep on changing the gears. The more I change the gear, the more power is given to my vehicle, है ना? If more power is given to the engine, so when engine gets more power, so what will happen? The car will run faster. So in this case, how do we define that part? That means leverage does the same in the business. Whatever money we are bringing into the business, that will pump up the business to do more, to do better. Then that would be to reduce the needs of external financing, to maximize the profitability, then to increase the risk to the shareholders and to minimize the use of debt. Okay, so I think the entire question should be visible to you by now. In this case, the correct answer would be what? The correct answer in this case would be when we are looking at leverage, it is just to look forward towards maximizing the profitability, because we will cry whenever we are paying interest. We will show it as a profit or a loss. It's an expense that we'll be booking in our books of accounts, right? Next question. Which source of finance involves selling ownership shares in the company to external investors? We are selling the shares of the company to outsiders. Is it debt financing, equity, trade credit, or crowdfunding? Crowdfunding is a cool way of raising money, but this is something which is not done by our country right now. This is not gaining a lot of importance. Crowdfunding is that you tell people that you want money and they give money to you. Then in this case, the correct answer would be uh, equity financing. As I told you, debt is for long term, trade credit is for short term, but these are outsiders liabilities. Crowdfunding is there, not there in our country. This is again raising money from people, and they will pay you as much amount they would like to. In this case, the right answer is equity financing. It's the ownership of the organization, na? Then which financial strategy focuses on minimizing the cost and increasing efficiency within the company? Risk management, working capital, cost control, or asset allocation? Which financial strategy focuses on minimizing the costs? Risk management. Risk is just to minimize the risk. है ना? Then the next point is cost control. Nah, cost control is all about the focus where we are looking forward towards controlling our cost without losing our quality. है ना? Again, that's the point. But what is the question saying? Minimizing the cost and increasing the efficiency. This means they are talking about that. Always remember, cost control will never say reduce the quality. It will always say maximize your productivity. So in this case, the correct answer would be cost control. Done? Okay. Here comes the last question for the day. Which type of financial decision involves determining the mixed debt and equity in terms of business? That is investment decisions. Investment talks about putting our money outside. Financing decision, dividend or liquidity. Dividend talks about the money that we are interested in giving to the shareholders. Liquidity is if you ask me money today that ma'am I need 10,000, can I pay you 10,000 right away? That is called liquidity. And then we have financing decisions. It involves all these dividend, financial, all these are part of the portion of financing itself. So in this case, the senior is financing decisions. Got the point, everyone? Okay, so that's it for the day, and I would like to discuss the portion there. The CAIIB registration is starting from tomorrow, from today. That means it is starting from 1st of October. If you haven't looked forward towards your registration and you're still thinking what particular thing you should do, electives should be taken or not, right? That is one of the core concerns that everybody feels, right? So what you can do is you can go on to our website, that is www.adda247.com, and you go onto the area of CAIIB November 2023. This is the sale is going on. It's just about to end, so it's way better you look forward to it. Double validity is available on it currently, and just have to look forward to it. Double validity in terms of pack means you will not only get current batches that are going on, the previous batches will also be available, the future batches will also be available, plus all the elective papers are given in it. You don't have to choose, all the electives are already there. Rather, you can review each and every of them and choose the one that you would like to do. Then the next point is, after reviewing it, one more thing can be done, that is yes, in this case you will get double validity, as well as when we look forward to it, you just have to use the coupon Rakhi 80. As soon as you will use the code Rakhi 80, you will get for 7367. Done. So this is it for the day, everyone. I'll be meeting you in the next class. Till then, don't forget to check up the Mahapack. If you're looking forward to it, then kindly check it out on our website or in our app for further details.